Samuel. What are we selling? I told you what I'm selling, Donnie. Do you have some buyers? So I did want to introduce you guys to Samuel. Samuel is a lender based out of, well, he's from Michigan. He's a lender in Texas. Sam has closed about 97% of my deals have been closed through Sam. Most of our clients are self-employed people, entrepreneurs, tax preparers, lawyers, creative directors. It's an extensive background. So I do this live is especially for entrepreneurs, people that are self-employed, hairstylists, nail techs, whatever it is that you do. I know a lot of people, it is kind of hard to purchase a home when you are doing a lot of tax write-offs and things like that. So I do want to introduce you guys to Samuel. Sam has saved so many, and I'm not just saying this. I'm being very free-hearted when I introduce y'all to Sam. So even if y'all don't use me as y'all realtor, I'm sharing Sam with y'all. Sam has saved a bunch of deals for me. I've had deals that have went through underwriting with other lenders and have been denied, and Sam has came in and saved the day and closed the deal. So when I say all bets on Sam, look, all bets on Sam. Sam, you have to pay me for this program. Like, what are you doing?
I'm blushing.
So when I say all bets on Sam, I say all bets on Sam. Our clients love us together. We work so well together. We just have a great relationship, and I do want you guys to know what type of programs are out there for you guys. W-2 is fine. Very simple transactions. But when you're thinking about self-employed, 1099, or things like that, it does get a little bit complicated, and there are programs out there for you guys. So without any further ado, I think I've done my thing. Sam, talk to the people, and I hope y'all, Louisiana and Texas. So let me tell y'all how much Sam rocks with me. This is how we rock with each other. I hit Sam up like I got my Louisiana license. What we about to do? Like, what we about to do? He's like,
said I had to get licensed in Louisiana.
So he's like, it's nothing. Let's go. Let's do it. Let's work. So if you guys can hear Sam, he cannot. If you're just jumping on, he cannot join Facebook. He's an uncle.
You ain't got to say it like that.
I don't know what he got going on over there, but just use your imagination if you're thinking about who Samuel Johnny is. So there you go, Sam.
All right. Well, I appreciate that introduction. I feel like I'm coming to get an Oscar on stage or something like that. But yeah, so I've been a lender since 2012. Started in Detroit, opened that office. And then in 2017, I opened my offices with Southwest Funding, and I transitioned to Houston. So I still have the Detroit office, got the Houston office. Now we're in New Orleans. Just got everything situated in Georgia last month. So so now we're officially in 4 states, and I enjoy helping families. That's kind of my motto: one family at a time. And Armeisha and I work well together because we're just real people. So real people help, real people qualify for home loans, because at the end of the day, everyone needs shelter. And a lot of times we are limited in our access to financing. And especially if you're self-employed, you don't necessarily have the documentation that you need to get the type of home that you want. And even if you filed your taxes, sometimes you may not have filed enough, because I'll keep it real with you. In most cases, you can't hear me?
Oh, go ahead,
okay, all right. You got a delay on my Facebook, so you was touching your ear, so I didn't know.
Oh, I was trying to see if they can hear you, but I think they're good because they're sending reactions.
Okay, cool. All right, so a lot of times, if you're self-employed, just to keep it real, you guys don't file your taxes. So you guys either file some of it or you don't file at all. So I have programs and products where you can pretty much state what your income is. I can use a profit and loss statement, and we can still figure it out. And in most cases, when you're purchasing homes in that 800, 900 million plus range, you are self-employed, and you do need special financing. And even if you're W-2, you still need special financing because conventional loan limits don't take you into that $1 million mark. So that's what I specialize in. That's what Armeisha specializes in, especially negotiating. Armeisha, for lack of a better term, she's a dog when it comes to negotiating. So you know, she's going to make sure that you're taken care of and you're not taken advantage of by these builders and stuff like that, because they're in it for themselves and to make as much money as they can make. So she's going to make sure she has your best interest at heart. And I'm going to make sure that your numbers are right, you get a good interest rate, and that you get into the home. My closing rate since 2012 is over 99%. And that's not an exaggeration. I'm over 99%. So if for any reason we don't close, I'm confidently going to say it'll be your fault, not mine. I'm going to tell you everything that you need to do. I'm going to send you a list of everything that I need up front. It'll be a seamless transaction. It's not going to be any surprises or anything like that. I'm going to communicate to you. I'm going to let you know exactly what I need, and then you'll be in your home. And it's a seamless process. And I can finance everything from conventional, FHA, VA, all the normal products. And then I can finance, you know, apartment buildings. For investors, we have DSCR. So if you don't want to use any of your income, we can just go 15% down on an investment property. I have 100% financing for FHA. If you got a 10-unit apartment complex, I can finance that. Whatever you need, I can help you do it. Just, you know, get in contact with Armeisha, and then she'll navigate you my way.
Okay, cool. So we're going to touch on it's 8 o'clock, so we ain't going to be here long. About 8:15, we're getting off of here. Okay, we had a little technical difficulty, so about 8:15, we're getting off of here. Okay, so I have a ton of questions when it comes to a lot of people are interested in investment properties. So that's like some of the biggest questions I'm getting right now is in investment properties. So what is the income requirements? What is the credit score? How can they use the income from the actual investment property to buy the investment property? So can you touch on that really quick?
Yeah. So investment properties are purchased two ways. We can either use something called a DSCR loan. That means debt service coverage ratio. And that's when you simply say, hey, I like this property. I have at least a 660 credit score and I have 15% down. Okay, great. I'm going to use the projected income from the property as the income to offset the mortgage payment. So that's easy. So I'm going to use the projected income. I'm going to order an appraisal. The appraiser is going to tell us what this property would generate as far as income. And I'm going to use that number to offset the mortgage payment. 15% down, you know, decent credit score, 660, somewhere in there, 640, 660. The second way is using a traditional mortgage loan. That means that you provide your W-2s, tax returns, income statements, and then I'm going to use your income. I'm still going to use the projected income from the property, but this program allows you to utilize conventional financing, all right? So this is not a DSCR. This is a regular conventional purchase, right? And you can purchase this, get a low interest rate, 15% down, and you're in there. And the third way for an investment property, there's one more way. You can go with, you can go FHA and do 100% financing, or you can go, and that's no down payment, or you can go conventional and do 1 to 4 units on an investment property up to like 1.4 million, and that's only 5% down. So we got, you know, a few different ways to make it work, but you can go all the way up to like 1.4 million with as little as 5% down, and that's if you're going to occupy at least one of the units. So we got a few different ways.
Okay, so someone on Facebook asked, what about USDA?
USDA is 100% financing. It's for owner occupied only. It's low to median income, and it's for rural areas. So you have to look at the USDA map, and we have to determine whether or not the home that you like qualifies for that. And let me see if I can put the USD map in the comments so you can check it. Armeisha Gauche Limited, who can comment on this post? All right, I think I can comment. Oh man, let me see. So I'll put the website in here. So if you like USDA and you like, hey, I don't want to put the down payment up, USDA is an option. I would say it's better to go with an FHA 100% financing as opposed to USDA though. That's just my, you know, my personal recommendation. Because
so Jawanda, did that answer your question? He said he believes that it's better to go FHA 100% financing than USDA. Yeah. And LaShawn, I know you had some questions, so I am going to say the live because he did answer your question too. So Samuel, the next thing is, what advice would you give a self-employed person? So right now we're only speaking to self-employed people. Is my thing muted?
It looks like you're paused on my end. It says it's waiting for live video signal.
On Facebook?
Mm-hmm. Let me reload it. Okay, you're good to go. All right, I'm going to add this comment here for her. So this is the USDA eligibility map. So I'll add this. You just put the address in and it'll tell you, but I'll say go FHA 100% financing. USDA is a different product altogether, and they're very strict on income, but both of them are 100% financing. So if you're going to go with one, I would say go FHA instead.
So yeah, I am going to try to save this live after y'all, and I'm sorry the service was lost because someone was calling my phone. I forgot to put it on airplane mode, so I am sorry. Someone did try to call my phone. So another question is, okay, and we're specifically speaking to, and I'm sorry, but right now we're specifically speaking to self-employed people, 1099 contractors. Y'all know we don't file our taxes right. Y'all know we don't do right. So right now we're specifically talking to self-employed individuals who do not qualify for traditional financing. So what advice would you give to someone who is self-employed? They saying they can't hear. I know they can't hear.
I can hear you, but hold on, let me see. I can hear you on IG. Let me see if I can hear you on it. Yeah, it just keeps saying that live video signal.
I ain't time for Facebook. Facebook is stressing me out. So I'm gonna save this one and then I'm gonna add this one to Facebook. That's just gonna be the best thing I can do for Facebook. Let's just say this is someone that has filed a lot, has taken a lot of deductions, so their adjusted gross income is just really, really low. What advice would you give these people, self-employed, high net worth, or whatever? What advice would you give them to prepare themselves to purchase a home, maybe within the next 6 months to a year, and regarding paperwork, regarding their assets, regarding what advice would you give to them?
So, number one, reach out to either you or myself, and we'll tell you exactly how to prepare a profit and loss statement. The profit and loss statement can be prepared by pretty much any tax preparer. It's going to itemize out how much you made every month, and that's your income. So I don't need tax returns. I don't need bank statements. I just need your business license. So that's just your articles of incorporation. I need your recent invoice over the last 30 days, profit and loss statement, and that's it. So really, we can get you going in 1 week. It's not something that's even takes 6 months of preparation or lead time. 2 months bank statements, and that's it. It's very easy. So you don't have to go through the whole process of filing tax returns and everything else. The disadvantage to these loans are that you have a higher interest rate and you have to put down at least 10%. So I tell people that, hey, this loan, although it's great, it might not be a long-term loan because you don't want to keep the higher interest rate. So once tax season comes, you're in your house, you're comfortable. Now let's look and see, okay, how can we do your taxes correctly? And instead of doing deductions, we do depreciation. And I'll get on the phone with your tax preparer and walk them through that if they're not familiar with depreciation. But depreciation allows you not to pay taxes, but still use that income for your mortgage. So you can still walk away with a zero bill, but you can still qualify for the low interest rate mortgage. But that's what I would say to prepare you for it.
So profit and loss. What is the minimum credit score for a profit and loss loan?
660. So the minimum credit score is a 660. But if you have a 660, it's 25% down. If you have a 680, it's 20% down. If you have a 700, it's 10% down. So you want to get, to that 700 mark. And if you need help with that, we can help with that as well. So we've done it before. So we're going to get you to that 700. That's the main thing. So if you're someone that's at a 640, okay, we may need some time to get you to that, to get you to that 700 number, just because we want you to put down 10% as opposed to 25% if you're at a, 640 or something like that.
Okay. So, okay, next question. This may be the last question. Okay, so what advice, because I am getting this a lot, right? People with challenge credit that want to go through credit repair. So what advice do you give people that are dealing with challenge credit that want to go through credit repair? Because my stance is I'm not biased, because credit repair was my first business.
Okay.
So I'm not biased when it comes to credit repair, right? But I do also tell people that nothing is guaranteed. So the money that you spend on credit repair or paying someone to do certain things, you can just pay off your debt. That's my stance, that you can just pay off your debt and then possibly, dispute it or something after that. So what advice would you give some people that are dealing with challenge credit, that want to go through credit repair, or they feel like they need credit repair, or they feel like they don't qualify for a house? Because there are some people with bad credit, but they still qualify for a house.
Right.
So what advice would you give them? Because it charges you to run their credit, right? So I'm not gonna send someone to you with challenge credit and then you have to pay for their credit report and then you never hear from them again. So that's just my stance, right? So what advice would you give to them if they have challenge credit and if they're thinking about going through credit repair, or they just don't know what to do, they just feel like they don't qualify? What advice would you give to them? Because as lenders, y'all are not protected. I guess we got a little protection right now with this signing this, this biased agent thing, right? But as lenders, you get clients all day like, oh, I'm ready, run my credit. And then you pay for it and you never hear from them again, right? Yeah. So what advice would you give to them if you like, hey, look, you ain't ready right now. I'm not about to run your credit because I ain't about to pay for it, right? So what advice would you give to them on how to approach the situation?
So if someone is, the first thing I would say is get an account with myfico.com. If you know that your credit is not where it's supposed to be, then get an account with myfico.com, because MyFICO is different than Credit Karma, is different than Experian. When someone says credit score, they're talking about FICO score. So FICO is who provides the scores to lenders. So when you get that account with myfico.com, you're going to see the same score that I see. You're going to see the same score that the auto lender sees, the credit card company. They have different scores depending upon whatever industry that you apply for, okay? So when you get that account, it's going to cost you about $40 a month to see all three scores, but at least you know what's going on, all right? Then contact me. Even if you don't have that account and you see, hey, I'm in the 500s on Credit Karma, contact me. I'll do a soft pull on your credit. Soft pull is a little bit less expensive for me. But I pull a lot of credit reports every month. My credit bill is sometimes $1,000, sometimes it's $3,000 every month. But I've been doing this long enough to where that's just a part of it for me, right? But if you're serious about it, I'll put up the $30 to pull it, and then I'm going to send you to my guy in Michigan, because he's only going to charge you about $500 to do your credit. He's not going to put you on a monthly payment plan where it takes us 6 months. It's going to be $500. He's going to get you together, and then within 60 to 90 days, we'll be where we need to be at. So the whole thing about credit repair is a lot of people do it, but the longer they can keep you in the system, the more money they can generate off of you. So you got to make sure that you go to someone that's not looking to do that, and they're looking to really get you in and get you out. So make sure that you know what your credit score is first and foremost, myfico.com. And if you're serious about doing it, contact me. I'll do a soft pull on your credit. I'll do a rapid rescore so I can tell you exactly which levers you need to pull. Pay this credit card down by this much, pay this installment loan down by this much, instead of you guessing and just paying off everything. Don't pay off any collections. Don't do anything like that. Let me see it first, and then I'll send you to my credit guy, and then we'll work on it.
Okay, so any questions? Is there any questions in the chat? Because that's a lot of my biggest questions, especially with, I just deal with a lot of self-employed individuals. Like if you're W-2 and you're got your bank statements and you got your check stubs and you have that proof of being on a job for however long, then you're fine, So I really deal with mostly self-employed people. Most people that follow me are self-employed people, and they don't believe that they can buy a house, or they just think that it's a hard process. And Letitia is just like a walking testimony, because Letitia called me and was like every time she called me, it was like, next year, I'm gonna be ready 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 next year, until this year she reached out to me. I'm like, girl, you ready? Let's just go with it, so let's just do it. And she just had everything in line. She had all her paperwork together, and everything just pretty much flowed.
Yeah, hers was easy. Hers was easy.
Kind of seamlessly for her, or whatever.
It was, though. We got it done in like 3 weeks, so hers was easy. There wasn't any issues with Letitia.
Because we we've dealt with some hard hitters. We've dealt with
Sure.
some hard hitters. Yeah, so yeah, I just like, again, most of the people that do follow me, they are self-employed, they are entrepreneurs, estheticians, just different backgrounds. So I did want you to break that down to them. I did want you to break down investments to them. We are about to hop off this live. If y'all don't have any questions, if you guys have any questions, please feel free to drop them in the chat. I am going to save this live from Instagram and try to add it to Facebook since we had some technical difficulties.
Oh, yeah,
and me and Sam will try to go live on Facebook another time, but it just didn't work out. And guess what, Jazz? It does not have to be a big, pretty house, because luxury is a mindset. It's not a price point. So I don't want people to think that. I don't just sell big houses. I sell luxury houses at any price point, so luxury is a mindset. It's not really a price point. It just looks good. But yeah, I'm looking forward to that, Jazz. And if you're in Louisiana and you need some lashes done, contact Jazz. What you guys say?
So one more thing. So I like to piggyback off what you just said about luxury being a mindset. If you're someone and you're like, hey, I want to buy a house and I may not be able to get the exact house that I want to get right now, get the most house you can get for your budget, for what you can afford, right? Because I've seen people go from getting a house that's $200,000, staying there for a few years, right? Doing 100% financing, getting into that house. And then a few years later, they sell that house, walk away with $60,000. And now they got $60,000 to work with to put towards the next house. So now, even though they started with this $200,000 house, their next house is $700,000 because they got $60K to play with. So get the most house that you can afford for your budget, because at the end of the day, any house is better than you renting someone else's house, right? If you're renting, you're at 100% loss. At least if you buy, you're building equity. You're actually saving your money every time you make that mortgage payment, even if you don't realize those gains yet. Once you sell, you'll be very happy that you made the decision to buy at whatever price point. Like she said, it's a mindset. So we're happy to help.
Yeah. So you don't have to go for the juggalo on the first one, so it's just a mindset. You're going to get a luxury experience with me and Sam. Champagne closings, you're going to be taken care of at whatever price point you come with. At whatever price point, is champagne closings at whatever price point. So, yeah. So if you guys don't have any more questions, I'm going to try to save this live. I look so good on this live. I'm going to try to save this live. I'm going to add it to, I need to talk to you, period, Armeisha. Okay, fine, Jazz. Send me a DM and we're going to get you together. We're going to get you together. So if y'all don't have any more questions, I'm going to save this live. I'm going to add it to Facebook. Again, Sam, his name is Samuel Johnny. I'm going to tag him. And again, even if you choose not to use me as your realtor, Sam is a very, very good resource. He's a very, very good lender. So I do recommend him.
Realtor, trust me. Everybody with a license does not know what they're doing. Use her as a realtor.
So even if you don't choose to use me as your realtor, I do recommend Sam, especially if you're self-employed. VA loans. Wait, we missed that part. We missed that part because Sam specializes in VA loans. So before we get off of here, let's talk about that, because I actually had someone recently reach out to me about a VA loan, and I was like, yeah, I know exactly who to send you to. Now, granted, we've done mostly self-employed loans together, but I do know that you specialize in VA loans too.
Yeah.
So touch on that.
So VA loans, when I first started in 2012, the office that I worked at, we did strictly VA loans. So I did VA loans for the first year and a half of me being a licensed lender. I never touched any other loan type. So I know VA loans front and back. I'm doing one right now in Michigan, and you can get a home on 100% financing. The seller can cover up to 6% of the closing costs. You have to get a wood destroying insect report. The seller has to pay for that. So it's a very easy mortgage loan, very easy process. I need your certificate of eligibility. I pulled that, need a DD-214. If you have any type of VA disability, you don't have a VA funding fee. But a VA loan is easy. It's very similar to FHA, but you don't have a down payment. And I can get those done quickly. Those have the best interest rates too, VA loans. So That was my bread and butter for a long time. And I love helping veterans. I've helped everyone from the Navy, you know, my dad's a VA guy. So it's like I know those loans very well. So if you need help on that, reach out to me.
So, and there is a misconception when it comes to VA loans. Oh, I think I need to change the battery in my smoke detector.
That's your house? I thought that was mine. I was like, man, glad it's not me.
So there is
Ghetto.
all right, I'm about to get off. Dang, okay, all right. So there is a misconception. So what is the minimum credit score when it comes to VA loans? Because per my knowledge, there is no minimum credit score, but it just depends on the lender.
Right. So let me tell you something about any type of mortgage loan. VA does not have it. So this is how it works. The VA does not have a minimum credit score. FHA does not have a minimum credit score. What they do have are underwriting guidelines. So they don't list a minimum credit score. But if your credit score is a 500, there's a reason that it's a 500, right? So when I underwrite the file and I push it through the automated underwriting system, it's going to read your credit report and it's going to say yes or no based on what's on there. It's not necessarily looking at the score as a disqualifier. So I've seen them get approved as low as 580, right? Because you can have a 580 and have decent credit, but it just means all of your credit cards are possibly maxed out. You might have had a late payment in the last 12 months, 1 or 2. So at minimum credit score, no. But credit report wise, if your credit's messed up and you've been having a lot of missed payments, a lot of collections, it's going to read that. That's the first thing that it reads, not score. 580, I would say, if you're not there, let's hold off. At least get to a 580.
Okay, so yeah, before we get off of that, because I do have a lot of veterans that do follow me as well. So that was some good information I wanted to touch on it before we jump off. So I don't think we have any more questions. So I am going to save this live. I'm going to try to download this live. I'm trying to work out the kinks, the technical difficulties, and I'm going to try to save this live and add it to Facebook. And I am going to tag you onto Facebook. I am excited to work with Samuel in Louisiana. I am so excited.
I'm coming.
Yeah.
All the balls, all the Mardi Gras, all the parades. I'm in there now.
Hey, look, we already know why you're going to say that. Hey, and I understand it. Hey, I understand it. But I am super excited to work with Sam in Louisiana. Again, he is a good resource. So I wish you guys to reach out to him and utilize that resource. So if y'all don't have any questions, we're about to log off here. I'm going to try to save this live. I hope it don't delete. I'm going to try to save it, and I'll tag you on Facebook. And we got to work.
I know how to do it. I promise. We'll figure it out.
We gotta work out the kinks for next time. You probably gotta to update your Facebook or something, but we gotta work out the kinks for next time we go live. So, all right, Sam, it was good talking to you, and I'm gonna see.
All right, cool.
I'll see you on Tuesday. I'll see you on Tuesday, right?
Tuesday, yeah.
Looking like okay, I'm just.
Because I thought it was Wednesday, but they sent me the email, so we'll get it together.
So, I'll see you on Tuesday. This man crazy.
All right.